morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Monday, May 23rd. Stocks on Wall Street are set to open sharply lower following steep declines in the Asian and European markets. The global sell-off was prompted by renewed concerns about Europe's sovereign debt problems. On Friday, Fitch Ratings downgraded Greece's credit rating, and Standard & Poor's lowered its outlook on Italy's rating. The focus on Italy seemed to take investors by surprise because that country had moved out of the spotlight recently. Spain is another area of concern after the country's ruling Socialist Party suffered widespread losses to the conservative Popular Party in regional elections over the weekend. The elections followed a week of anti-government protests, and the results may cast doubt on Spain's ability to meet its debt obligations.
The reemergence of the sovereign debt crisis as a main driver of the markets has investors scrambling for safety. The yields on Greek, Spanish, and Italian bonds are jumping, and the yields on German debt are tumbling. Meanwhile, the euro is losing ground against the U.S. dollar, slipping below $1.40 for the first time since March. And the stronger dollar is putting pressure on oil prices. Crude is now well below $98 a barrel, and silver is falling further below $35 an ounce. But gold is holding steady near $1,510 an ounce because it's widely seen as a safe haven investment. And as for the impact of the crisis on the stock markets, banks have been the hardest hit, since they're still widely exposed to European sovereign debt. That weakness could extend to U.S. financial stocks today. Citigroup and Bank of America are both set to open lower.
Another international stock trading lower this morning is Sony, down about 3% in U.S. trading. The Japanese technology giant said it now expects to report a wider net loss for the fiscal year that just ended. Sony lost about 40 billion yen last year and had projected a profit of 70 billion yen for this year before the earthquake and tsunami in March. Now the company says it will likely lose 260 billion yen. And another tech heavyweight under pressure today is Apple. It's dropping more than 1% in the pre-market on top of Friday's 1.6% decline. Last week, a factory in China that manufactured iPads exploded, killing 3 workers. The factory was run by Foxconn International Holdings. It's unclear how long production will be suspended for and how that will affect the supply chain for the iPad 2.
One stock that's likely to open higher today is Campbell Soup. It's rising nearly 1% after posting a 12% increase in fiscal third quarter profit. Campbell Soup also projected earnings for the full year at the high end of its forecast. And finally, we're taking a look at the financial institutions that closed their doors last week. According to Weiss Ratings, the list included 3 banks: Summit Bank of Washington, and from Georgia, Atlantic Southern Bank and First Georgia Banking Company. One credit union also shut down, the Hmong American Federal Credit Union in St. Paul, Minnesota. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.